Hello there, welcome to this video where we're going to be covering what order blocks are. This is part of the series that we've been covering on YouTube, completely free for you to get a handle of how to trade the financial markets. Now, order blocks are one of the PD arrays that we use in order to determine bias, sometimes even to determine the entry area where we are going to take the trade. So let's go ahead and dive into the content for this video right now. So first things first, one of the acronyms used for order blocks, there's a little bit of difference in terms of what a CISD is and an order block is. But basically the CISD, it's basically a change in state of delivery. So order blocks is a change in state of delivery in the market. It's not about the candle itself, but rather the shift in the market's behavior from buy side to sell side or vice versa. This change occurs when the opening price of the candle is violated, indicating a shift in the market's direction and focus on either buy side or sell side liquidity. So basically the market is going in one direction and all of a sudden is interrupted by a change in the state of delivery, which means there's this candle, which is a down candle right here, and then the up candle is the candle that causes the change in state of delivery by breaking the top of this candle, the previous candle, with the body. This is considered, some people consider the just by basically closing above the body of the previous candle. I like to be a little bit more on the safe side. So if it closes above the wick or the highest point of the previous candle, that is considered the black one, now becomes an order block. The changing state of delivery is basically saying, hey, now we are forming what it is called an order block. Okay, so here is an example of what I don't consider an order block. Basically it's a candle that's going up, and then this here, instead of closing below the lowest point, to continue to go down, it closes within. So I would wait for at least another candle to close below this point in order to consider this an order block. Okay, and here's an application of a bullish order block. So the bearish candle or series of bearish candles that swept the sell side liquidity before breaking structure to the upside. That's what a bullish order block is. So looking at this chart right here, you have a series of candles, which is 1 and 2. Now I only marked the extreme, which is this candle right here. You could have just grabbed from the top of this one here to the bottom, the lowest part right here. And that is the sequence or 2 candles that we consider an order block. Basically, if you have if you can imagine the line chart, it would be a sequence of orders just going down, 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 down on a line. And this here, now it changed. You can see that it goes all the way up here, breaking the highest point of this sequence of candles. Now, the market tends to come back here to mitigate the orders. And here is where we would basically put our buy order to continue to go higher. Okay, so that's the change in state of delivery. Why? Because we were bearish. Going down here, this sequence of candles up, broke again, but then instead of continuing to go down, it went past the previous candle. Now, if you've seen the other videos that we've put out, this is also a change in state. It's a market structure shift. Basically the market is going one way, now it's going the other way. Now, order blocks not only can happen, and you will see the different types of order blocks that we use in the extremities of a move, but also in the middle of the move, so determining the order flow. Okay, let's go ahead and look at the bearish order block now. It's the same concept. We're going up, the series of candles going up right here, then down, up, and then this here, this move breaks down the lowest part or the lowest point of this candle right here. When it breaks, then now I can mark, this 2 candles, the white ones right here. In this example, I just marked the top one. I didn't need to mark the whole move. And then price goes back into the order block, mitigating some orders, and we can even combine some other concepts like the fair value gap that you can see. It's the gap in between these 2 or 3 candles, right? So you have the fair value gap, you have the order block, so it's a very safe place to take the trade. This would be a valid entry. Okay, now what's a low probability? So the first two examples, the bullish and bearish, are very high probability order blocks that price will tend to hold in that area and then continue to go down. Now what's a low probability then that we have? Now this order block still works. It doesn't mean that it's not going to work, but it's just that if you don't have a sweep of liquidity, like in this case, you have the high right here, it went up, so it took out the sell side, and then it went down. So this is a high probability because it went up and down in this move aggressively. Okay, now this is right in the middle of the move. You can see two candles up, one down, two candles up, then it came back to mitigate this order block right here and continue to go higher. Now it depends on your risk appetite. This would be just fine for a 1 to 2, possibly even more. Okay, the bearish example, the same thing, two candles down, going up, then down. It still broke structure, right? They came back, and then you could have taken the trade right there. Okay, now we're going to look at the different types of order blocks. There's more than these three, but I like to focus and keep it very simple. I don't need to complicate things more than they already seem to be. Once you get used to seeing this on the chart, and we're going to jump onto the chart in just a little bit, you'll see that it's very simple to determine what's an order block is. Okay, and by the way, if you're part of our Discord community, we will handle or hold a couple of live trading sessions that you can ask questions, and we're just going to tackle one order block at a time so you can really nail down and have it ingrained in your brain, okay, of which ones to identify on the chart. So the three different types that I like to think about is, one is the extreme order block, and this is basically the order block at the extreme of the move. We just saw the example before. You know, it's basically an order block that went and swept liquidity and broke structure right here. The last candle up is our order block. You see we don't have a sequence. We have these two, then down candle, and then up. So this last up candle would be considered our order block. Okay, that's the extreme order block, and you can just call an order block. Now, what's the mitigation order block, and what's the difference between that and the first one? Well, the mitigation is basically an order block that's basically in the middle of the move. You have this extreme order block right here. In reality, this is a rejection order block that we are not covering here, but it's basically the tip of the candle, which is the wick. So we have this order block, and it came and it tapped into it and broke structure again, forming an order block. These two candles right here, I just grabbed the last one, okay, and that is the mitigation block because it already had tapped first on the one order block, and then it came back, created another one and two, so it's the second order block of the move. That's called the mitigation order block. Now the breaker order block, it's very similar to the first one, and this seems to have the best win rate, so to speak. It doesn't happen, or it doesn't show up on the chart very often, but when it does, it's probably one of the strongest order blocks out of the three. Okay, and it's very easy. Once you spot it, you'll see that it's it's most likely going to hold. And there's another term that you might have heard somebody say on the internet. It's called the unicorn model, and basically the unicorn model is it's a breaker block that has also a fair value gap in it. Okay, so but let me explain first to you what the breaker order block is. The breaker order block is basically this. You have this move down and then this one up. Okay, now when it went up, it broke structure. Now this last move right here, which is this here, is the one that you pick to which is your breaker block. It's the last move right here. It actually is just that little candle right here, or not little but big candle, the first candle of this move. So it's basically an order block that failed. Okay, so if you're going up, up down, you expect this to hold, to continue to go higher. In this case, it broke lower. Now the price comes back and mitigates this area. Okay, so let me go ahead and show you actually on the chart. Before you continue watching this video, I want to quickly let you know that now you have the opportunity to join our Discord community, where you can have access to our exclusive content to help you learn how to day trade profitably. Besides that, you will also find other ways to have multiple streams of income and become part of a community of people that, just like you, want to achieve success. Just click the link in the description of this video or visit levelxtrade.com to have instant access. Now back to your video. And let me see if I can find a couple of examples. I believe this is the example that I picked. Yeah. So this is an example that I showed there for you on the PDF. You got this move down and then up. You have a break of structure. Okay. And coming from here down low, you have this up, down. So we have this break of structure, that break of structure right here, and this one break of structure for the to the upside, and then broke it down. And right here is the shift. Now you would mark the last candle, and you can see that price respected. And then for the unicorn, if you're curious to hear more about it, it's basically a fair value gap that's inside that order block, and you can add actually the midpoint line of that order block. Let's see here if I can. Midline, I believe that it's in, well, let me go ahead and put the POI and then midpoint. There you go. All right, so now you can see that you have a break to the upside, the breaker block built, and then the middle of it, you don't see any candles closing with the body above the 50% of that order block. Plus you have the fair value gap that gives us more even strength to that area. So you could have just taken a trade in the middle of this order block and covered this high right here to go lower. Or if you wanted to be more conservative, you could even close this last fair value gap, just in case price decides to go and tap into that fair value gap, or even the extremity. Okay, so you have basically a choice to make, because that's going to affect your RR, your risk to reward. Okay, so that's an example. And then right here, let me just see real quick where we have another example. Yeah, you see you have, this is also an order block or a breaker block. You have now going to the upside. Let me show you real quick. So you have this move going up, down, and then the break of structure, and then down again to continue to go higher. Okay, and you mark the last candle, which is this right here. And in this case, it came and tapped the very extreme of this breaker block. Okay, so that's why it's important to be, cautious. Sometimes you just get stopped out if you're too greedy. Like if I wanted to put in the middle and cover just the fair value gap right here, I would have been stopped out. But depending on the size of the move, it's a good idea to just go ahead and cover the extremity of this breaker block. Okay, so again, you can go into your chart and just every time there's a break, or just go ahead and see on our from the PDF examples that I gave you. Like for instance, there's a break of structure. Guess what? The last candle right here, it's in order block. Midpoint, boom. Okay, it broke again. Okay, broke to the downside. The last candle is this right here, last up candle, and you can see following the order flow, and I can put in the midpoint. I can cover just that one right there to be on the safe side, and you can see you have a huge risk to reward. Okay, so that's the power of order blocks. Okay, if you have any questions, feel free to leave us a comment or just ask in our group. Okay, so thank you so much, and I'll catch you in the next video.